So good afternoon, everyone. This is Audrey Russo, President and CEO of the Pittsburgh Technology Council. I am glad to be here. It's June 1st, hard to believe, and I know many of us are out and about and happy to be back at work and networking with people. I know myself, I had a breakfast and it was a pure delight. So hopefully everyone is safe and sound and getting vaccinated and at least enjoying all that we've missed over the long period of time. So today we have an opportunity to do a little bit of a deep dive with Paul Uhlman. He's president of Federated Hermes. And before I do that, I do want to give deep appreciation to Huntington Bank for being our partners through this entire journey and beyond. They have believed in us and known that we are just passionate about telling stories, but we were more passionate about keeping the community tethered together. Jonathan Kirsting is with us each and every day. He's Vice President of all things media and marketing, and simultaneous to doing this show, he's also busy with doing all other ways of sharing stories and highlighting so many of the amazing companies that are right here in our region. So 40 by 80, that's the longitude and latitude of Pittsburgh, and that's the wholly owned subsidiary of the Tech Council. And that is our charitable arm. And soon you're going to be hearing more about what we're doing with creating pathways for people who might not have opportunities to be in tech and innovation. So we're pretty excited about an apprentice program that we're launching and the work that we do in helping entrepreneurs as well as kids in schools. So I want to jump in now and thank Paul Uhlman for joining us today and taking the time out of a very busy schedule, I'm sure, coming right back to work after a long holiday weekend in the world that he's in. So welcome, Paul. Thank you for being here. And I hope that you are safe and sound, but more importantly, what I'd like to do before I start asking any questions, I really just like to know, how is Paul, who is Paul, what's been Paul's professional journey, sort of start wherever you think makes the most sense to tell us how you landed in the role that you're in right now.
Yeah, great. Well, thanks for having me, Audrey. I really appreciate it. So I'm actually not originally from Pittsburgh. I grew up outside of Philadelphia.
That's okay.
But that's right. But I am a Penguins fan and a Steelers fan. I can assure you of that. But actually, I went to college at the University of Pittsburgh, and that's how I got to Pittsburgh, and was actually recruited by, at the time, Federated Investors to start with a company going on 32 years ago. So I've been a lifelong Federated employee. Started out really as an account administrator, where you were answering phone calls from clients, learning the business, getting licensed. I knew I always wanted to get into sales, and was fortunate enough, after about a year, that took a territory in Ohio, so moved to Columbus, Ohio, and started calling on smaller trust companies and private banks in the state of Ohio. So drove around the state of Ohio for a couple of years, ended up getting back to the Philadelphia area, and took on some additional responsibilities calling on bigger clients, ultimately getting to New York City. Started calling on the big global banks there, began managing people. I will tell you, the highlight of my sales career was actually meeting my wife, who was a client at the time, believe it or not. Yeah, this is probably 25 plus years ago. Actually, the one person who I knew pretty well brought her along to the lunch, and the rest is history. So we lived in New York City for 6 or 7 years, started to have a family, moved to Connecticut, worked out of New York, now have 4 kids. Actually, next year we'll have 3 in college and 1 in high school. It's hard to believe.
Wow.
Yeah. And moved here to Pittsburgh 5 years ago. So I've always worked for Federated, but primarily on the East Coast. But when they asked me to sort of run the distribution organization, sort of required me to come to Pittsburgh. But again, I knew the city quite well, And I must say, at the time we moving 4 kids, at the time we had an 11th grader, 9th grader, 8th grader, and 5th grader. I was not father of the year that year, but as I tell everyone, I mean, Pittsburgh is so welcoming. I mean, and people have just been phenomenal, and that made the transition super easy. So so that's a little bit of sort of the personal background.
Great story.
Yeah,
that's a great story. Your kids are used to moving around. It'll serve them well.
It's funny you say that, because I think particularly our oldest, who moved here as a junior, just sort of, learning to make new friends in a new school environment, I think really helped him out in college, and hopefully the same for the other kids.
That's great. That's great. Or at least you can repeat that to yourself over and over again.
I keep telling myself that.
So let's talk a little bit about this Hermes addition to Federated. Can you talk about that? And then we're going to talk about this responsible investing and some of the things that have been at the helm of Federated.
Yeah, sure. So we actually acquired them going on 3 years ago. So July of 2018. And prior to the acquisition, we actually got to know, they were known as Hermes Investment Management out of London. And for quite some time, I think, as we were doing some strategic planning about our own organization and sort of where there were gaps and where there were opportunities, we uncovered a couple of things. One was our distribution, who we work with is primarily US centric. So most of our assets that we manage are US based, and we wanted to become more of a global investment management firm. So how do we expand our sort of non-North American distribution? And then secondly, there are capabilities that we don't have that we thought were really important to have if you want to be sort of a big global investment manager. And we identified a couple of gaps. Sort of private markets business, think of infrastructure, real estate, private equity, are things that historically we did not manage ourselves, as well as, some non-US business or non-US investment management capabilities. Think emerging market equity, Asian equity, et cetera. So 8 or 9 years ago, we sort of set out thinking through how we could maybe get more of those capabilities and expand our distribution, which is how we got to Hermes. And interestingly, we uncovered them because of their investment capabilities. And it wasn't until sort of, a couple of different meetings that we really began to understand the way they have been able to deliver the investment returns that they have is using ESG integration and using that information to make better, more informed decisions. So I don't want to pretend like everyone.
Talk about ESGs a little bit so that people understand that.
Yeah, so ESG, at a very high level, environmental, social governance, are really what the 3 letters stand for, and it's their ability to, and now of course our ability to understand that data and that information and how that plays into making better investment decisions to give our clients better risk-adjusted returns. So, think of it as, on the governance side, right? Diversity and inclusion, right? At the board level, at the organizational level, you think about, environmental, climate change, all of these factors can be predictive if you understand the companies the way we do, or we like to think we do, can be very predictive of outperformance in the long term. And one of the things we do a little bit differently than some organizations is we actually have an engagement team of 60 plus people that actually go out around the world and engage with companies in a very consultative way on various environmental, social, and governance issues they're dealing with and helping them, which then gives us a lens into their longer term business strategy. And I think
Wow.
as a money manager, the more insights you have relating to those factors, again, the more informed decisions you can make for shareholders.
So, I mean, wasn't it in 2006 that the UN helped to launch the Principles for Responsible Investments in 2006? Since then, the list of signatories to these principles has grown to nearly from 100 to about 3,000 in asset management. So that represents what, like some $90 trillion. So responsibility is not, responsible investing is not a new fad. But what is new? What is different?
Yeah. So Audrey, just as an aside, we were actually one of the original signatories of the UNPRI, and actually wrote 6 of the principles. So Hermes Investment Management did that. So we've sort of been doing this since the early 80s. But I think what's really changed, and I'll sort of have my discussion be more focused here in the US than maybe in the UK or Europe, is I think here in the US there's been this misunderstanding that ESG investing is excluding bad stocks from your portfolio or not owning them, right? And I think as we did the acquisition of Hermes and began to talk to our clients about ESG, we quickly realized that the spectrum of understanding of what it is and what it is not was vast. And obviously there's a segment of investing where you can exclude stocks, but then there's a segment of ESG where you're just integrating this data into how you manage money. There's thematic investing where, okay, maybe you want a low carbon portfolio. So the spectrum is very, very large. The other driver here in the US is, we're going to have the greatest intergenerational transfer of wealth, call it to the tune of, I've heard numbers as high as $60 trillion, right? That, are going to be inherited by, the younger generation, where many of these issues are very, very important to them. So, as we were out talking to our clients, both institutional and the advisory community, we thought, we got a lot of requests. Hey, I want to learn more about that. I want to understand that more deeply. It occurred to us, an institute, we call it the Responsible Investing Institute, that perhaps we could create to help educate people will go a long, long way. So that's actually what we did. It's 3 modules as of right now. We partnered with another consulting firm, KKS, which is renowned in the business, to help us really help our clients understand the whole ESG continuum, because more and more people are asking them about it. And we wanted to make sure they were fluent in sort of the intricacies of ESG investing.
Well, how well equipped, given the transference of money and given the priorities and the proliferation of ESG, how well equipped do you think most advisors are to help their clients really understand? Because you've talked about like categorical investment as well as just sort of an overarching kind of investment strategy that's focused on, can be an array of things, right? It could be diversity, it could be people rights, it could be their presence in different countries.
Right. Yeah. So we actually did a survey to try to better answer that exact question. And the survey results came back that the advisory marketplace as well as the institutional marketplace had commented that over 90% of the time they've been asked by clients about ESG, yet only a quarter of them felt comfortable talking about it, right? And that was the disconnect that we saw, that, hey, this Responsible Investing Institute can be a bridge to help them become more comfortable and more fluent with, the intricacies of these concepts, so as to have better conversations with them on the topics.
And the concepts are really complex in terms of measurements and in terms of, pulling, I don't want to say, sort of going under the sheets, but really finding what some of those indicators are. Is that what those community engagement people do and help?
Yes and no. So I think the way we've organized these modules, so it's sort of, the first one is just ESG 101, sort of, okay, what is ESG, what it is, and it's some of the things we've talked about here earlier. The second module has to deal with data and the various types of data that are available to investment managers like ourselves. And this is where the engagement team and the data sort of play with one another, because if, let's say, there's a data source out there that's ranking, pick an oil company, and maybe they had an oil spill. Okay, on the environmental side, that company would probably get a very low score because of that incident, right? And I think what we tried to look at is not only those data points, but we think it's more important to understand, okay, if there was an issue like that, what is the company doing to prevent a future oil spill, or perhaps even continue to, find other more sustainable forms of energy. So the engagement people give you a lens into what they're planning and thinking about, rather than sort of looking in the rear view mirror that, okay, they're bad because they had an oil spill. So, and to Audrey, to your point, it gets very, very nuanced, because you've got certain data that is factual, but in some ways backward looking.
Right.
How do you get the view through the windshield? And our thinking is the only way you get the view through the windshield in terms of what companies are doing and how they're doing it is through client engagement.
And so, as an investor, as an investor, not as an investor of other people's money, are those modules available?
They are. So they're, if you go to our website,
Okay,
and
we'll put it out there. We'll put it out there. It's on your website.
It is.
And then we can drill in. And so that education for people like myself and people listening.
Absolutely.
Okay, that's great. That's great to know.
It's under the Responsible Investing Institute.
Okay, that's great. So Jonathan, there's a couple of, I think there's at least one question out there.
One just rolled in from Eileen Stewart. Wants to know, do you advise on tax credit funding with your clients, like EITC or OSTC specifically?
I know exactly what they are, but we do not.
Okay.
And I'll tell you, so our business model is a little bit different in that our clients tend to work with advisors and or institutional investors, and really do not have any direct individual investors, coming to us. So that's part of the reason why we're less involved with that.
But actually, at your responsible investing center, any of us can go in and get, educated on a lot of these topics, whether or not we're your customers.
Exactly.
Okay.
Yeah.
And so what's the hope of that? What's the hope of that? That you get the investors wise?
Yes. So I would say it's a couple of things. And by the way, I think these different modules, they tend not to be the Federated Hermes commercial. We really tried, and that's part of the reason we worked with KKS advisors. We wanted this to be educational. So, by helping advisors and institutional investors become, more fluent in these discussions, our hope is there's some value that's added there, and they continue to think about us for their investment needs. But, Audrey, clearly, the more people are educated on this and aware of, the different intricacies of the business, I mean, that's the right thing to do. And we sort of have a tagline, responsibility, where it's a responsible thing to do. So that's clearly a benefit for everyone.
And so there's been, in California, there's been, a lot of movement about women and people of color being on boards. And I think they have a mandate now. Is that correct?
They do. I believe that is going into place. I don't know if it's in place right now, but I believe that is in motion. And you know what, I think all of those issues are really, really important, right? There are lots of studies out there that talk about, a diverse and inclusive employment base is, makes better decisions. You don't deal with groupthink. You don't, and it's taken a little bit of time for this to become, more front and center here in the US, but it, clearly the momentum is being built there. And if you look outside the United States, in the UK and in Europe, I mean, many of these things are being mandated by law in terms of incorporating ESG considerations in investment mandates. So, the question as to whether we will, as a country, get to where they are or not, and obviously there are a lot of political dynamics to this conversation as well. But I think when you sort of cut through all of that, when taking into consideration environmental, social, and governance factors purely from an investment management standpoint allows you to deliver better risk-adjusted returns. And that's what we're in the business of doing.
So that, it's interesting. What countries are leading? Who would you say are leading in it?
I would say the UK is they've been on the forefront, but then, many parts of Europe as well. I would say Asia is a little bit behind. I don't mean to say that in a derogatory way, but maybe not as far along. And then as you sort of swing around the world, clearly Australia is there as well. Canada more so than the US. And I would say Latin America might be even on par with where we are. But and they're 3, 4, 5 years ahead in the UK. I mean, it's been going on for quite some time.
Well, you can even feel this movement affecting non-public companies as well. And, and they're, obviously trying to catch up, and many people are really trying to do the right thing in terms of their representation of people and looking at their carbon footprint. But it really does matter whether it's public or private. And the performance has been high. They say that when more women are on a public board, that ethics and compliance, and this is nothing to talk about gender, but just saying that ethics and compliance tend to be higher.
Yeah, and we've done studies that show, if you avoid the bottom 10% of companies with poor governance, I mean, you can actually see, meaningful investment returns by avoiding the laggard. So it's both a risk mitigant, but an opportunity to generate alpha as well.
Yeah, I mean, that's pretty profound. So the importance is all of us to get to know that. So you're saying, number one, log into your account. You can, log into the responsibility center that you have. But also, are there other things that we should all be thinking about in terms of this space?
I think it's a very personal decision, to be honest with you. I think there are, there are individuals that feel extremely strongly about, climate change, right? And, some of those impact strategies, candidly, their number one objective is to address that issue. You might have to give up some investment performance there, for certain impact strategies, but that's you trying to make a difference, right? That's a very individual, personal decision. Similarly, if you're looking for, just trying to do the best you can, there are solutions there. So it really all depends on what's important to you. As an investment organization, I think we want to make sure we have solutions that perhaps meet those personal decisions that each individual has.
Are there any trends ahead? Are you seeing some trends that in this space?
Here in the US, I mean, the trend of awareness has been unbelievable. And as I told you, we did this acquisition a little less than 3 years ago. I mean, just in the last 3 years, the awareness of, environmental, social, and governance issues. And you just think about what the country's been through.
Right.
If you would have asked me 3 years ago whether I thought we'd be where we are today,
Yeah.
I'd be like, no, that's too fast. We never get there. So, the train's rolling down the tracks here. Clearly, I think with the Biden administration, Democratic Congress, I think there's more willingness to be thinking about these issues a little bit more seriously. You think about some of the infrastructure ideas that are on the table, renewable energies. I mean, this is steaming down the track. So it's going to continue to pick up momentum, in my humble assessment.
Yeah, I think so too. I think this whole conversation of calling social impact investing and all that people are uncovering in terms of our history, even though you say let's not look back, I think looking back has allowed us to look forward. And I do know that there's lots of voices on shareholder calls from all kinds of companies that I'm sure that you've heard.
Yes. And I think that gets a little bit back to our stewardship business where, I think our thinking is, rather than being an activist shareholder and foreseeing some of that, I think our approach is we can be a lot more collaborative and partner with these organizations to help them rather than, take on some adversarial positioning. So the stewardship business it really is an important part of how we think about ESG integration. And again, rather than relying on just data points that are backward looking, really, allows you to have a collaborative discussion with the C-suite to understand what they're doing and then help them get there as well.
Yeah. Well, Paul, you have a cool job. You've had a great gig so far, and you got great work. You've got great work ahead. So I can't thank you enough for being with us. I want to tell everyone, and I'll tell everyone as the week progresses, is that we've been doing this since I think March 25th, 2020, almost every single day, except for Saturdays and Sundays and holidays. And we're looking at landing the jet at the end of this week, and landing the jet saying, you know what, the world has shifted again. Amazing things are happening right at our footsteps. We are seeing, in many ways, the light at the end of the tunnel, just a little bit, hoping that the fall doesn't bring anything back for us. And people are having lunch, just like I had breakfast this morning with, had a work breakfast and, had an opportunity to talk. We're now going to move into something called beyond business as usual. And, we're kicking it off, I think on the 17th of June. We're going to have a conversation with Representative Ed Gainey. And if you live in the city of Pittsburgh, you know that it's important to hear what his vision is, come November, if there are no opponents, that, he will be our next mayor, and that matters to all of us. So, stay tuned. We're still going to be providing relevant ability to be connected. We're an association, so it's important for us to all be associated and help one another's business. So stay tuned for that. And Paul, my hat's off to you. Thank you for sharing. I really thank you for sharing all that you are doing. It is very important. And there's a lot to unpack in terms of companies and in terms of their responsibility. So, and welcome back. Even though you've been back for a few years, welcome back. And remind your kids you still are a good dad. You did good. You did good.
Thank you very much. Really appreciate you giving me a chance to speak with everyone today.
Yeah, this is great. So I want to thank everyone. And what do we have on board for tomorrow, Jonathan?
Well, as we begin our slow and steady descent towards Friday, tomorrow we're actually doing our Winning the Talent Together series.
Okay, right.
So we're talking all about how apprenticeships are really becoming a game changer for getting talent into organizations. It's gonna be a great panel discussion, should be a lot of fun and very insightful.
Mm-hmm. And then Thursday we have the Pennsylvania Secretary of Transportation.
Absolutely.
So Paul, you can join in as well. We're talking about topics that probably are important to you as well. So everyone, thank you. and Fridays ends with the Defense Innovation Unit from DoD. That is very interesting as well. See, we keep finding interesting things and I'm like, oh, we should do one more day. We're not. We're going to continue to do this work throughout all of our programs. So I can't thank you all enough. So thank you, Paul. Thank you, everyone. And we'll be here tomorrow. 12
Thank you.
Thanks, Paul.